Well, listen, I thought I'd just take a few minutes here at the top to talk about some important changes that are occurring with cannabis taxes here in the state of California come January 1st. As those of you who've been active in cannabis in California probably recognize, we had a very complicated tax system that was set up that went into effect in 2018. That really put the distributor at the heart of many of the, or at the heart of two of the cannabis taxes, the excise and cultivation taxes, and then left the retailer as the taxpayer for sales and use tax, which also applies on a statewide level to cannabis in the state of California. It turns out that that tax structure was very complicated, difficult, I think, for industry participants to administer, and difficult for the state. And so earlier this year, in an effort to reform the taxes and also to eliminate the cultivation tax, which was a tax that was based on weight rather than on price. And so particularly as the price of cannabis dropped, the effective rate of the cultivation tax really climbed, adding to the calls for elimination of the cultivation tax. So earlier this year, the state legislature in Assembly Bill 195 reformed the cannabis taxes, discontinuing the cultivation tax effective July 1 of this year, and moving effective January 1, the cannabis excise tax from the distributor to the retailer. So it will now be a much simpler process, 15% of the retail selling price rather than 15% of the wholesale price multiplied by some average statewide markup, which was the complicated formula before, which I'm happy to go into if anybody has any questions about that. The bill also included a number of provisions designed to help us enforce California's cannabis tax law and further our efforts to rein in the illicit market, which is obviously still pretty prevalent here in the state of California. And it also included some important equity operator provisions, including vendor compensation provisions, which I'll go into in a moment. But it's a much more streamlined model, you can see, versus what we had before. The retailer will collect the sales tax and collect the excise tax and remit those to the state rather than remitting the excise tax to the distributor, who would then pay the state. And the tax now would also not be due until the product is sold, which was one of the sort of strange side effects of the prior system. There are, as I mentioned, some equity operator provisions included in AB 195 for qualified operators who receive a waiver of the cannabis license fee from the Department of Cannabis Control. This is for business owners who have been negatively impacted by the criminalization of cannabis over the years. So if they meet the requirements set out by DCC, which include having an annual gross revenue of $5 million or less, and at least 50% ownership by a person meeting one of the equity criteria, in addition to having the license fee waiver, an eligible retailer would be able to retain 20% of the cannabis excise tax due, which is, up to, if somebody were right up at the $5 million level, that would be, I believe, $150,000 per year possible vendor compensation, which is the term we use here at CDTFA, when certain taxpayers are able to keep some of the taxes collected rather than remit them to the state. So if you do qualify, we do have guidance on that, and please reach out. You need to get approval in advance by CDTFA. So please don't just hold back tax revenue. That doesn't end well. The bill also includes some important tax enforcement provisions, again, to help us try to better get our arms around the illicit market here in the state of California. Among the important provisions, for unlicensed persons who are in possession of cannabis, the cannabis excise tax will immediately become due and payable as if they were the purchaser of the products at retail. So if we find unlicensed persons in possession of cannabis, we make an assessment of what the market value is, and 15% of that becomes due and payable as a tax liability. For licensed persons who sell or transfer cannabis or cannabis products and fail to report those sales in metric, or who who don't accurately input the information into metric, those individuals or businesses immediately become liable for the cannabis excise taxes, again, as if they were the purchaser of the products at retail. The bill also allows us to, as we can in sales and use tax arena, to hold corporate officers or other responsible people personally liable for unpaid cannabis taxes. So a corporate entity or an LLC will not shield personal assets for individuals whose businesses may have unpaid cannabis taxes. And the bill also established a multi-agency task force that includes CDTFA and DCC and the AG's office and many other state agencies that is working hard to try to support the legal cannabis industry in the state of California, which we recognize is facing very difficult and unfair competition from those who are not collecting and remitting taxes or abiding by the host of other laws that legal cannabis businesses have to abide by. Anyway, so that's a bit of the change that's happening. We have teams around the state here at CDTFA that are working hard on this. If people have questions, I'd encourage them to reach out. We, of course, we recognize that taxes are complicated and that we're here to try to walk people through it to make sure that people who are trying to comply do comply. So I'd encourage you to reach out. And our hope is that this will strengthen the legal market in the state of California and ultimately improve the tax revenue situation for the state of California as well. Anyway, with that, I'll turn it back over. And as questions come up, I'm happy to answer whatever I can.
First, I want to applaud getting AB 195 over the line. That was a huge lift, getting cultivation tax removed, simplifying tax to the point of sale. And we know getting anything done in California is tough from a legislative perspective. One comment, Nick, you had during your Thorn, you said lower taxes or lowering. I think the goal was for tax neutrality in this shift. And from what we're seeing, there's a bit of confusion on compounding taxes, specifically on the local taxes. And I'd love to hear your thoughts on that, because when we start looking at how excise tax compounds local, state compounds and taxes those, you actually end up in an increase in taxes to the consumer. And it really depends how that compounding is going. Yeah, I'd love your thoughts on how you're thinking about
Well,
that.
I mean, you're right. I mean, if you have a sale of cannabis, then the local tax applies. And then, if there are delivery fees or anything that are done by the retailer, those also apply. And then those are all subject to the excise tax. which is then, that total number is subject to the sales and use tax in the state of California. So there is, there are multiple layers of tax, and we hear you. That is the standard way that taxes work in the state of California, not just for cannabis. I mean, the thing I would point out, because there's a lot of talk, and no doubt the taxes are steep. If you look at tobacco taxes, which we also administer in the state of California, the tax on a pack of cigarettes in the state of California is $2.87 per pack. It's steep. It's above 60% of the wholesale cost of a pack of cigarettes. So while I certainly understand the impact on the business side, I would say that there are other industries that have very high tax rates where we don't see this level of non-compliance. And so while taxes, I grant, are one of the factors at play, there are other issues at play, including, lack of retail outlets. I mean, if you had this few, sellers of beer and alcohol, which we did have in this country at one point, you are going to have illegal sellers. There are, issues with compliance. There are, frankly, people, too many people operating in the legal and the illicit market. And so I think there are a lot of things beyond just the tax rates, but you're right that there is that layering, certainly. And I would say that the neutrality, and you're also right about the neutrality, and that is the hope, because there are a built-in series of people with very commendable projects, including childcare and all sorts of things, that are the recipients of the cannabis taxes. So the idea is that by eliminating the cultivation tax, we're hoping that we'll be able to keep the tax revenue steady. But if it's not steady, then the excise tax will increase up to 4% extra over the coming years. So that's one important thing to point out.
Yeah, what we're finding is operators are confused on what gross receipts mean and what is shown to the customer or not in terms of that line item delineation, and the proper accounting of which. Because right now we're seeing sort of two opposed or different views. We have the revenue taxation code in 6012 that talks about gross receipts without the inclusion of sort of delivery fees, whereas there's been a couple special notices, L866, I believe it's L869, that says, no, they are included. And so which one trumps the other one? And then from an operator perspective, especially on the dispensary side, if they wanted to have a neutral tax stance, then not showing local taxes on the receipt may actually allow them not having to compound that. I'm not sure if that's your interpretation or not, but I'm curious in how you
I don't think that not having it on the receipt would get them out of the gross receipts liability. The issue, and I'm happy to put you in touch with our folks. The issue is that there is the tax law, which is pretty substantial. I've got it there on my bookshelf. But then there are rooms full of 100 years of legal decisions and legal opinions, and so it not everything is right there clearly in the code. It is based on literally thousands of regulations and decisions and all sorts of other things that apply to all tax programs, not just cannabis taxes. So there's the definition of gross receipts is among those, but I'm happy to have our team look to make sure that we are clear on it. And again, it's not something that is decided here. It is just that is how the taxes work in the state of California, unless the legislature chooses to change that.
Yeah, no, I totally agree with that. I think it was really around, this is the first time dispensaries are collecting this amount of cash for tax remittance. And to your point on looking at that and not spending it and accounting for it properly is so important for us going into the new year.